Good morning and welcome to MoneyWise. I know you're wondering whether this account has been hacked. No, because Rina is here. And I think I should ask the director to probably show her face. But we are on and very much welcome to you, wherever you are. If you're on Facebook, it's good to at least click that share button because today Rina has dedicated the day to answer your questions. Any question you have about money and making wise decisions about your money. What better offer than that from a life coach in terms of money? That's what I call you. So Rina, welcome, and it's good to be on your hot seat.
Thank you. This is how everyone has been feeling, yeah? as I've been grilling them.
I know, right? And you know, when I threw in the poster to the people, already some questions started flowing.
Okay.
And you know, we're very grateful for everybody who has been doing that. And as I keep saying, today is dedicated for question and answer. But before then, Rina, I want to not be selfish, but probably ask a few of the questions that I feel would be very nice. And I did some research, so that at least I can get something out of out of you today. And so I would want to ask you straight questions to you because about investing. And everybody wants to invest to grow wealth, to become wealthy, and all those kind of things. In fact, my first question would be this: rich versus wealthy. Is there a difference?
I think rich is I have a lot of money and assets. Wealthy is all-encompassing.
Okay.
So I have health, I have sound mind, I am joyful and peaceful.
Okay.
I have a healthy family, healthy family relationships. And I'm thriving in all facets of my life.
So wealth is in a broader
including
perspective
money.
of it.
Yes,
okay,
I
including
think so.
money there.
Yes.
So don't say you're rich. It sounds so narrow-minded anyway. So my first question to you is this: of the many mistakes people make, one of it is not investing. What would be your comment on that?
Yeah, so it's not an easy answer because sometimes not investing is a good thing, right?
Oh, okay.
Especially if, there's an opportunity, you're unsure about it and you decide not to invest. But I think your question is around investing in general.
Yes.
Should I invest or not? And not investing is not a good thing. So I remember earlier in the week we had a different session and I shared how this article I read by Ben Mundy. And I apologize for the noise in our building. I don't know what that is.
Don't worry about it, but don't worry. But at least they can hear us. So let's
Can they?
Yeah.
Okay. Somebody's missing having a night out. Anyway, so Ben Mundy shared this article and I thought this makes sense. He said, we live for about, I think, 4,680 weeks or so. And out of those weeks that we live, 70% of that time is spent growing up, sleeping, going to school, and within retirement. You have 30% of your life, of those weeks, to work enough to support your retirement years as well as leave an inheritance for your children. Now, if you're to do that, if I use that 30% of my time going to work, earning a salary, coming home, spending it on groceries and holidays, when will I be able to have money enough for retirement and to leave an inheritance for my children? So I have to invest my money or put my money in assets that will grow or compound alongside me as I continue to work, so that at the time I'm coming to a point of retirement, my money has also grown, and now I can sort of sit back. I have assets that are now paying for my needs. So if I don't invest, be sure and guaranteed that you will be poor in time of retirement, unable to meet your needs, and we don't want that.
Speaking of which, I've seen some guys still scrambling in matatus, and you can tell this is close to a grandfather, and you feel that pain because he's still in an oldie tie, and you can tell he's working somewhere in an office, and you're wondering, I just hope you have secured your retirement and you started way early, so that at least you don't have to be on the losing end when it comes to your old age. That's a good insight. Insight from there. Second question is this: what is the danger of not making wise decisions, especially when it comes to money and not investing? The danger of not making wise decisions, especially when it comes to money.
Well, the fact that you could lose all of it is the main danger. So, I think the fact is we all want to grow our money and we want to be wealthy and we want to be comfortable. We want to live our best lives.
Yeah.
But I think what happens is, in our effort to do that, we tend to rush and do things quickly, invest in something that we think will give us 5 times. The truth is that when you look at the people who have grown their wealth, they've done it over time, consistently denying themselves today, putting aside in something that will grow into the future that they can benefit from. But what happens is we want to do that so quickly that we make mistakes. I'll give you an example of a gentleman who I met, and this guy, was the average Kenyan, didn't have, big salary, decided to save, and he saved consistently, and then he ended up with, 2.5 million shillings.
It's good money.
Which is good money. And then, as he was listening to his friends, somebody said to him, oh, by the way, there's this amazing investment opportunity where you can earn 2% per month, guaranteed.
There's so many offers like that
There
that are coming,
And I'll talk about that in a short while.
Yes.
And this guy was like, what? Guaranteed, 2.5%. That's 12% a year guaranteed. And I don't need to stress. My bank is giving me 2%, 3%, 6% at the most. So if in fact, it's not 12, sorry, it's 24% per annum. Because it's 2%
deal
per
right
month.
There. That's a good deal.
So he's like, this is a no-brainer. Took all his money and put it into this investment. And a few months later, he lost everything because it ended up being a sham.
Wow.
So what should he have done? What he should have done is taken time to think through, what is this investment? Where are you guys investing my money? For you to be able to pay me 24% per annum, guaranteed, how much are you making? And where are you investing my money? It's important for you, and you must demand to understand where your money is being invested. And who are these people who are behind this opportunity? And are they credible people? How long have they done this before? How is it that you can guarantee? So first of all, there are red flags that you need to be aware of. Number one,
talk about them.
Guaranteed. That's a red flag.
There
are no guarantees. Nobody can guarantee any return except the government of Kenya, and that's because they can print money. So if you're investing in a treasury bill, which is an instrument that is issued by the government, or a treasury bond issued by the government as well, those ones you will get your money back.
Okay, like Makiba, right?
Like Makiba, yes. Like Makiba. Sorry about that. So so if you invest in a Makiba issued by the government, guaranteed. Anybody else and their cousin, there are no guarantees.
Be careful.
So please be careful. If anybody uses that word guaranteed, that's the first red flag. Number two, just note that there are generally averages when it comes to interest rates or earning or returns. So anybody that offers you returns that are above average, try and understand, what are you doing that everyone else in the whole world is not smart enough to know? So for example, you know how people have come saying, oh, we do Forex.
Yes.
And you can earn 30% per month. We do Forex.
Good cash. And they even have very nice boards with a cost that you can get immediately after.
So people get excited. 30%, I do the math. I'm going to make so much money. And then you put your money in there and then find that you've put your money in something that is a pyramid scheme. So interest rates or returns from investments usually will fall within a certain average. So, for example, right now in Kenya, if anybody is offering you over 20%, it's not that it's not possible. It's possible. However, you need to do a bit more research to find out, okay, please help me understand, what exactly are you doing with that investment? Where are you putting the money, and how are you able to make that kind of return consistently? If you understand that, then that's fine. If you're willing to take the risk, then put an amount of money that you can afford to lose. That's the other thing. The example of the person I told you, he put his entire life savings of 2.5 million in this opportunity. What we need to do is ensure that we think through, okay, what are my basic needs? What do I need to make sure that I can be able to meet, so that if something goes wrong, I lose my source of income, I have an emergency, things don't work out as they should, then I have money available to me that I can use to meet that need. So you need to make sure you have savings somewhere that can cover 6 months expenses, for example, before I put money in a 20-30% return sham thing.
I think that's already a nugget, that it's good for you to have some savings somewhere that can cover you for about 6 months or so. That's a nugget for anybody who's watching by there. I'm just picking up.
Absolutely.
So let me ask you this. There's so many, because you have already mentioned some, there's so many lies that exist about money, about investing, and people have bought into those lies, and you being, I like using the word money-wise, could you help the viewers who are watching to debunk 1 or 2 or 3 lies that exist right now and people easily fall prey to them?
I think one lie is, when I earn more, I'll save.
When you earn
When I earn more, I'll save.
But that looks like it.
So I think it's, this whole saving and investment story is really about a lifestyle and the way you live.
Okay.
It's about principles.
Yeah.
And so if the little that you have, if you're not able to save even just a small amount, when that money triples and quadruples, you will behave the same way. So, it's about stewardship and managing what has been given to you well. I like to also just let guys know, by the way, imagine, yes, you have what you have. Your shoes, your car, your house, all those different things that you have, they actually don't belong to you. They are under your management.
Yes.
And so if you don't manage what you have well, then even when more comes, you will not manage it well. And so then you will not get the opportunity to have more if you're not managing what you have now well.
So you start from the small
It
that you
starts
have.
from the little that you have.
Okay.
Maina, if you owned, 3 buildings that have a total of 300 tenants, and you needed a manager to manage them, you would look for somebody who, where they are now, have done a good job with what they have.
That's true.
Otherwise, then you wouldn't hire them. You want someone who has track record of doing good with what they have. Then you hire them to do what it is that you want them to do. It's the same with our own money. If we don't manage what we have, you will not get more. So it's a myth and a lie that when I have more, I will manage it better. So what you have now, the little you have, manage it well. The other lie is, as I grow older, and this is young people that have this, I had this misconception in my 20s. And I knew for a fact that as I grow older, into my 30s and into my 40s, excuse me, but my income is just going to do this. In fact, I had said I'll retire at 40.
We expect they should grow,
Yeah, I mean, what are you talking about? Every year, inflation is making my money reduce, and my salary, my income needs to increase at the worst in line with inflation. But you and I know that's not how it works. So it doesn't mean that the older and as time progresses, you will earn more. So right now, even if you are 27 and you have an opportunity to earn money, please save. Don't assume that as I grow older, I'll have more. By the way, you could start a business at the age of 25. By 30, you are balling. But it doesn't mean you will continue to ball until you're 50. The business could be disrupted and completely collapse at the age of 35. And so then what? So when you have the opportunity to make money, make the most of it by ensuring that you keep some aside for saving and investing in something else.
Let me ask you though, let me just interject before you give another lie that you need to debunk. Sounds funny, right? Before you give another lie, before you debunk another lie. There are people who say that between the age of 25 and 40, it's sort of like the age that you can use to make wealth for your lifetime.
Between the age of
25
to 40.
To 40. Is that true? I don't know.
Well, I guess whoever said that must have used some kind of averages and research. I don't know. So I've not done my own research, so I cannot say no. But I think that's when you have the most energy. I find though that your earning ability increases over 40. It doesn't end at 40. This is just from my own.
Oh, that's an interesting one.
Yes, because you know who you are. You're not afraid. You're confident. You're unapologetic. You are experienced. Your networks have grown. And so I find between 40s and 50s is actually when you maximize your earning potential. Yes. So doing business is easier than for a 27-year-old because you have networks. It's just phone calls. I mean, right now, today, tell me who you want to meet. They're just 2 phone calls away, and I'll get you any meeting in this country. I'm telling you, because of experience and networks that I have grown over time. But when I was 25 and 30, no, I can't say I had that advantage at that point in time. And so if somebody is 40 right now or 38 and feeling that, oh my gosh, I should have been able to have earned by now, relax.
Okay. It's never too late, right?
It's never too late.
Yeah, there's always this particular one of KFC. That guy started, I think, his investment at 65.
Yeah.
And he made his money then.
Well, he may have started then, but before that, I think it's important to also look at what journey did he have before that. The reason he was able to do that so quickly at that age is because of what I'm saying. The fact that he had invested, he has learned, you've got experience, you have competencies that you've got skills, networks, most importantly, that help you just sort of ride that curve so much faster.
Okay. So I think the underlying principle is that it's never too late.
Yeah, well, it depends. If you've not done anything with your life and you want to start at 60, it kind of is late to start then.
Okay.
But the point is that as long as you remain consistent, and if things haven't worked out for you, you've worked hard, you've done the best that you can, you've studied, you've found work, you're doing the best that you can. It's never too late, because opportunities can come, and within a year or 3, your life can be completely transformed.
Okay.
So don't be discouraged because you feel like, you're 45 and things haven't quite worked out for you.
Okay.
Yeah.
Wow. Now, you're almost done with my questions. I just want to probe the viewers that, remember, it's your day to ask Rina any question about money and making wise decisions about money. Have you debunked all the lies that we've had?
I'm wondering.
Yeah.
I think they may have disappeared. Let me see if there's another one. So yeah, there's one. A lot of parents fear talking to their children about money because they think that the children will become money-minded and, they'll not, so let me not talk about the children, or they fear that they're going to know, how badly I'm doing, or, whatever the fear is.
Yeah.
You must talk to children about money when they're young.
Okay.
And the lie there is children don't understand and they don't know. Maina, from the age of 3.
Yeah, I was about to ask them, what age did you start?
From the age of 3, you can start to teach children about money.
Okay.
As long as a child can count.
Okay.
Right?
Yeah.
You can start to teach them the principles of money, the value of work. Right?
Yeah.
That you have to work to earn. You don't just get money. Money doesn't just appear from somewhere. That imagine, even if I give you money now, Maina, somebody made something, took time and effort and energy to make it and sell it and create that money.
Okay.
Somebody put their mind to something, expended energy and spent time to create that money, right? So it doesn't just appear from anywhere. So value of work, for example, is something you can teach a 3-4-year-old.
Yeah.
Understanding how money works. Saving, learning to save. With my kids, what I've done is I've got these piggy banks where they're see-through. And you've got a slot that says save, a slot that says give, and a slot that says spend. And what happens is that they know they have a choice, and money gives you choices. So you can put money in save, you can put money in spend, you can put money in give. But those are the choices they give you. Just even knowing, even if it's 3 shillings we're talking about, knowing that when money is for giving, money is for saving, money is for investing, money is for spending as well. If they learn that at an early age, by the time they're 20, so please, it's a lie to think that children will not understand. Start teaching them young. Yeah,
many questions pop into my mind when you speak about that. There are people who start saying that you should not give kids money because you're now teaching them a culture sort of corruption, that once they do this, that's when they get this. How do you differentiate that so that you're teaching them the good culture of making wise decisions with money at such early ages, and it's not sort of like enticing them so that they don't grow in the culture of you have to give me something for me to do something?
Yeah. So first of all, you can't pay a child to do chores. Okay? They have to make their bed. I can't pay you to make your bed. It's a responsibility. Yeah. Right? If your chore is to clean the table after we're all done eating, I can't pay you to do that. Yeah. But there are certain tasks that you can sort of appoint to the child to let them know that if you clean my shoes, I'll pay you 10 bob or 100 bob, whatever. Okay. If you clean the car, if you clean the carpets, if you wash XYZ, if you clean the yard, these things that that you can get your child to do specifically that don't relate to their specific chores that you pay for. So that will also teach them the value of work and the ability to start thinking about, okay, so what do I want to do? What do I want to buy for myself? I need, and how much does it cost? So goal setting as well is something they can do and use those chores to make the money they need to buy whatever it is that they want. So it's important. It's not about just giving money. It's about them earning money. Because if they need to understand that money is earned, it's not given.
Okay.
Yeah.
So please send in your comments and questions in this discussion. And Rina, you know, sometimes I hear you appreciate your mom.
Yes,
your
I
dad,
do.
The watch.
Yeah.
Why you taught these things when you were young?
So, we didn't actually sit down around a table and have my parents explain this is how money works. No. In fact, even at 19, I didn't know what a savings account, a current account, and the differences were. I didn't.
Okay.
However, they exposed us through getting us to work.
Okay.
So I worked at my grandfather's shop. I worked at my grandmother's shop. My mom's mom had a shop where we worked when we were out of, even in high school. I worked even in primary school. I would go there after school during holidays to work there. And so, you know, I sort of understood how business sort of works from an early age. So I think the exposure of understanding how money works was through their own experiences. I remember being in early stage in university and them explaining about debt and having to make certain decisions because of a certain debt that they had taken. So if they hadn't involved us in those sorts of conversations, then I wouldn't know much about money at all.
Okay.
Yeah.
Let me throw in this, and I know your question, the people's questions are already popping in. Let me finish up my conversations with this. The line between savings and investing.
Okay.
Because I want to be honest, when you have some 100K just hanging around in the bank, you feel good, you're comfortable, even walking in the market, if you step on a tomato, you're not afraid because, you know, you can pay it off. And there is also the line of investing, where you almost just throw in everything and you look broke because all your money is somewhere being invested. Where do you draw that line so that you're not saving too much and just keeping it versus investing too much and you end up looking like you have nothing? Of course, the savings the investment will give you money later on. So where do you draw that line?
So I could speak for 6 weeks about this, but let me try and summarize.
Try.
So I like to look at it from, you remember Maslow's hierarchy of needs? Yeah, so you've got basic needs, you've got your psychological needs, and then you've got your self-actualization, right? Just if I just look at it as the three, I mean, there's 5 levels, but if I look at it as 3 general levels. So your basic needs is what you need to now save for. Where you put your money in safe, secure places that you know that you're not going to wake up in the middle of the night in a cold sweat because I put my money in this opportunity and that company has collapsed, right?
So and many people have fallen into that.
So the savings that you put in, you know, your savings account, in a treasury bill, in opportunities that are not necessarily high interest earning, are those that you need to sort of sit down and say, okay, what are my basic needs? I need food, I need transport, I need shelter, so that's my rent or my mortgage, education for my kids, and utilities, you know, rent, whatever. So those basic needs, I need to make sure they're catered for. My health insurance as well. So how much does that look like, right? And in addition to that, I need an emergency fund for at least, at the worst, 3 months of my key expenses. So when you add all of that, that's the amount of money you need to have in safe opportunities, such as your bank account, savings account, fixed deposit account. You can have it in a treasury bill. You can have it in a money market fund, so that it's easily accessible. Now, investing in these other exotic things now starts to come after you've sort of got a basic emergency fund in place. Then now you can start to invest. But you don't want to put all your money in safe places, because safe places will never make you wealthy. You also need to put a bit of risk and put your money in risky opportunities, but you need to do due diligence and make sure you research and find out, okay, what are the risks I'm taking? And I find that people don't ask themselves that question. It usually ends at, what is the return? And then you move on. But you have to ask, what risk am I taking? What risk am I taking? How do you find out what risk you're taking? By understanding where are these guys investing their money? How likely is it that they're going to make that sort of return?
Yeah.
If it's in the stock market, for example, what
Yeah.
company are you going to invest in?
Mhm.
What business are they in?
Yeah.
What product are they selling?
Mhm.
Is it a product that has a close substitute?
Okay.
Who is the manager? Who are the management? Who is the board? Are they people who know what they're doing?
Whoa.
What has their track record been? There's many questions that you need to ask yourself. That's due
True that.
diligence,
Yeah.
right?
Yeah.
You can't just hear cousin so-and-so made 3 times, so let me go and make. It doesn't work that way.
Let me just throw in one question from one of the viewers.
Okay.
It's Tess Njoki, now that you've spoken about the money market funds, says Mansa X of Standard Investment Bank
Okay.
gives the 2% monthly interest, and it's regulated by CMA.
Okay.
What's your take on it, Rina?
Oh my God. I was hoping that
I've
would
heard
be
about
the
this, by
question.
the way, and I hear it's a very lucrative.
This is what I would say.
Yeah.
It's important to understand where they invest the money and how are they able to make that return. I don't believe that they tell you,
Yeah.
we make this amount of money guaranteed. Tess, if you look at the advertisements, it doesn't use the word guaranteed. I think it says up to. And if you ask, what I'd ask you to do is ask them for their fact sheet, or what we sometimes call a tear sheet.
Yeah.
It's a document
Yeah.
that gives you information about, this is how we've performed in the last 6 months, in the last 1 year, in the last 18 months. This is where we're investing our money. This is the manager behind this opportunity. This is, so it gives you details of where the money is invested and how it is performing. Then you can use that document to ask additional questions to understand, okay, this is the kind of risk I'm likely taking by investing in this opportunity. Because they're regulated, and she notes something that's important, is a plus, because it means that there's an authority that is ensuring that they do the right thing with the money that they have put in. So it's not a pyramid scheme. It's a legit opportunity, right? So, and I'm speaking generally, not necessarily about that one, but take time to understand what it is they've invested in, and then put money that you can afford to lose should the investment go belly up. Because usually there's a trade-off between return and risk.
Yeah.
Generally, the higher the return you are promised, the higher the risk you are taking. So keep that in mind as you see higher returns being promised by an opportunity.
I think you should say that again, that the higher the return you promised, the higher the risk.
Yes.
Note takers, I hope you're noting that.
Yes.
Let me ask you this, and I know there are so many other comments as well coming in, and thank you so much for all those who are sending this. Listen to this. Is there a rank on the best bet when it comes to investing? And I think this question revolves around, there is the money market funds, others believe in land, others believe in I don't know what. Is there a best bet?
No, there's no such thing as a best bet. No such thing as a best bet. If we all knew, if there was somebody who knew a best bet, no one would be working. We'd put our money in that best bet and go sit in the Bahamas or in the Maldives and sip our pina coladas all day. No, there's no such thing. I think it's about assessing what your needs are, what your goals are, what income do you have, and what would make sense for you given the needs and the goals you have. For example, how old am I? Do I have children? Am I married? Am I the sole breadwinner in my home? And so let's assume it's a single parent who has 2 kids, and the kids are in high school. So for them, and perhaps it's maybe primary school even, then education is a key part of their need. So I need to make sure my children are educated, that if they have any gifts or talents that I want to be able to contribute towards ensuring that they maximize their potential as children. I want to be able to retire comfortably. I need to be able to afford the kind of lifestyle I'm living for the foreseeable future. And so the investment choices I make is not based on a best bet. It's based on my life circumstances and the situation I find myself in, which means that as I make investment choices, I'm not just making investment choices because it sounds like a good idea. It's because I need to save for university. So where's the best place for me to save for university? Okay. If I die, what happens? So for me, something like an education policy is critical. It's not an investment, by the way. It's a forced saving and a life policy that ensures that should something happen to me, that my children's education is catered for, right? So that's a basic thing I must have in my portfolio because I'm a single parent. I'm just giving an example of a person. So you think about investing and you then make investment choices based on your circumstances and situation, not because it sounds like a good idea, right? So I want to be able to put my money and save for any emergencies, right? Where should I put my money? Right now, best bet within that is a money market fund, within that criteria I have described, because a money market fund they're regulated by the Capital Markets Authority and the Retirement Benefits Authority. They are organizations that are constantly looking for opportunities, and because they pool funds, so what a money market fund is an organization, it's a pooled fund investment where an organization pulls funds from different investors and invest that money in safe opportunities. And by the way, the month of October will be dedicated towards just talking about money market funds, because I've gotten so many questions about them. Yeah,
because there are many people will be asking something, so that's a safe
questions,
one.
Yes. So we'll delve into that.
Okay.
But yeah, so they put money together and invest in safe opportunities. They put money in the bank, they put money in treasury bills, they put money in treasury bonds and safe opportunities, but they give better returns than putting the money in the bank. So instead of putting my money in the bank and earning 6%, I can put my money in a money market fund and earn 9%, for example.
Okay.
And so that's a great place to park money. So within the different asset classes, as we call them, there are better bets than others.
Okay.
So if it's stocks, there are better stocks than others. But there's no one thing that will guarantee me a good return. It's just that, okay, there's these ones that are better than these within the asset class. I hope that makes sense.
No, it makes a lot of sense there. Let me just read in some of the comments coming in.
Okay.
Samuel Chelanga, you're saying, where can I get your book locally?
Okay.
And he says he had looked it up at Yaya, Prestige, Textbook Center. It's not available.
Okay.
And I think
That's
that one, you can answer that with the fact that, you've spoken about, goals, purpose, all those kind of things. And I think you've detailed that in your book, is it?
Yes.
Absolutely.
Yes.
So where can we get this book? Because guys are asking.
Yeah, so you can get the book. Actually, I'm surprised Textbook Center didn't have it, because they usually stock it.
Okay.
I will need to give them a call.
That's why I bought mine.
Yeah, at Textbook Center. Yeah, so Textbook Center. If not Textbook Center, it's on Kindle, on Amazon. You can also call or WhatsApp 0707 633 433 to get your copy.
Okay.
Yeah.
Okay. Have you got that number?
0707 633 433.
Great.
Yeah.
Guess who's watching? Let me read the comment first. Then
Okay.
you go. That I'm watching MoneyWise this morning and gaining a lot of insights and making wise investment decisions. Thank you, Rina, for being faithful to your purpose and calling. Cherry Neon, well done. Great interview. Starts with a J.
Yeah, that's my mom.
Yeah, that's your mom.
Awesome supporter. She's amazing.
Martin Y, thank you very much for this, and I'm enjoying the conversation. Then there's Henry Thuku. He's talking about inactive versus active investment options. He's asking you to talk about that. For example, investing in a business, which is active, versus investing in land stocks, which is inactive. Do you want to shed some light on that?
So all of them are fantastic.
Yeah.
All of them are great. It's about just sort of seeing what am I able to do. So if you are in the banking sector, or you're a lawyer and you work 12 hours a day, or you're a nurse, you don't have time to do another business.
Yeah.
Right? So there are people who are generally able to go into business as an investment and run a business successfully, but then there's others who are just not because of their profession.
Yeah.
So depending on who you are and your availability in terms of time and energy, then you can choose investment options that suit you best. So inactive ones, and I don't know whether really we can call them inactive per se, because every investment opportunity requires an element of you getting involved.
Yeah.
So, for example, even like the stock market, if you decide to invest in stocks, you need to understand, what am I investing in? And even after you've invested and made a decision, you can't just invest, forget about it, and move on.
Yeah.
You need to keep track of what's happening.
What's going on?
Yeah. You're reading the news, stuff happens every day, and there's so many variables that affect companies that could cause them to collapse or to do really well. So you need to be able to constantly just keep abreast with what's going on.
Yeah.
So it's passive, but really it's also active, because you need to be aware so that then you make the right decisions as time progresses. Even a money market fund that we just talked about, it's, yes, you leave your money, but you don't completely forget about it. How is that company doing? They've announced their results, the company where you've placed your money. Are they doing okay? Have they posted losses? Did you see in the news that somebody was not able to get their money back? Those are red flags.
Okay.
That then if I see that, I need to make a decision where my money is concerned. It's not about just leaving money and forgetting about it forever and ever. Amen. No.
Yeah.
You have to keep tabs with what's happening. So the level of activity is different. So there's some that are really active. You have to be very actively involved.
Okay.
And then there's others that are less active. So I guess, those are the examples that come to mind at the moment. I mean, even like a chama.
Yeah.
Successful chamas, members are active. They're constantly looking for opportunities for the membership, for the investment company.
Yeah.
They're always trying to find what can we invest in, how can we grow our wealth. Because if they don't, then the growth of this opportunity is limited. Let me tell you the honest truth, Mina.
Yeah.
I have never seen a wealthy man or woman who became wealthy by investing in passive opportunities. That is the truth.
Okay.
Yes.
Okay.
Everybody that I know in my life and those who I watch closely and from afar who are wealthy have taken time to understand completely what it is that they would do. Whether it's real estate, whether it's a business that they run, whether it's investing in the stock market. Those who have invested in the stock market and done well with it are not passive investors. Okay. They take time to understand what's happening with the companies. Where should I be putting my money? Okay, now it has grown. Now I need to sell. Where else can I invest? It doesn't work if you're passive. So you can't be completely passive. Okay. There are those where you're passive, yes, but which ones are those really?
Okay.
Like completely passive. Even rental income, yes, you can say it's passive, but you need to make sure the money has come through from your tenants. When they've left, you have to find other tenants.
Yeah. Wow.
Yeah.
That's a good answer. I think Henry Thuku, if you want, to probably engage more in understanding this, you can always reach out to Rina, and she's here to answer that question. Mwai is asking, Martin Mwai, what is your take in saving with either Kenya shillings or I think dollars?
Yeah.
That's what it means. Gold and silver, because the currency are directly influenced by politics.
Yes, that's a great question.
I didn't even know these things.
No, it's very true. I thought you read my book.
No. I'm halfway. Let's go on.
So one of the things that I've said in the book, so I did. I wrote it, and I think for 6 years, I did research for a 6-year period and found that every African country, every single African country, I mean, we're talking South Africa, Nigeria, Ghana, Rwanda, Kenya, Uganda, Tanzania, all of them had depreciated currencies within the 6 years that I looked at the currencies.
Wow.
Every single one of them. In fact, the least depreciation was 30% depreciation in 6 years, which means, if you had put $1 in your drawer and left it for 6 years, it would be 30%. It would be $1, what? 30?
More.
$1.30.
Yeah, $1.30.
For doing nothing, no interest earned on it.
Wow.
So because of where we're from, the fact that we're an emerging economy, third world, means that we are subject to a lot of challenges
and forces that could influence all this,
such as, let's talk about politics for a moment. When you look at the economy here, we operate in cycles of 5 years.
Yeah.
So
which is really sad, but
it's painful.
Yeah.
So 5 years, somebody comes, my focus is this agenda, and our focus is now going to be these 4 things.
Yeah.
And someone else comes, now my focus is these 2 things, and no, now my focus is. So what happens? What happens is, policies and things that have begun by one regime suddenly have been forgotten or left, and something else has become more important.
Yeah.
And so because of inconsistencies and inability to follow through with policies and commitments towards a certain direction, then we tend to have problems there. So when investors think about investing in places like us, they have cycles of 5 years. So every 5 years you find, in fact, if you just look at even just the index in the stock exchange and other markers, you will see every 5 years there's a bit of a cycle that happens.
And then they've amused when the elections are back.
Right. And then in addition to that, during election seasons, people fear. And so what do? They take their money to safe havens. Other countries, hard currency, and so then we then suffer as a result. So because of that, I always encourage that, yes, of course you have to save in Kenya shillings, but also save in foreign currency, in hard currency as well. It's important.
Yeah.
Now, in terms of gold is also a fantastic investment, but as an insurance, a lot of large, not even large, but a lot of investors, serious investors, what they do is, in seasons, in fact, over history, in seasons when there's political uncertainty, economic challenges, you find the gold prices increase because it's a safe haven. So when there's, in fact, if you look at gold just this year, I think it's gone up, and now I don't have the figures off my mind, but at least 30% because of what happened with coronavirus. If you look at gold again, 2007, 2008, it increased quite in value a lot because of people with a financial crisis, people moving to a safe haven such as gold to store their money.
Okay.
Yeah, so it is an investment opportunity that people can consider. And yes, you can invest in gold in Kenya. Maina, it's listed.
Oh, yeah, by the way.
As an ETF.
I just wanted to know.
The gold ETF.
And I'm asking
Kenya.
for someone else.
Yes, Maina.
Investing in dollars. Do you just go to your bank and tell them, hey, what's up? I want to change this into dollars and do that?
Okay, so banks these days, because of the guidelines by the Central Bank of Kenya, if I'm not wrong, have asked banks to get somebody to sort of prove that you have earnings in foreign currency. I don't know if it's all banks, but if you can, open an account in foreign currency. A lot of the banks also offer investment opportunities in foreign currency where you can save in dollars.
Okay.
So yeah, go ahead and do that. I know the CBK governor will not be too pleased about me saying that. But yeah, I think it's important.
Okay.
Yeah.
I think now we're going to do a marathon of answering questions.
Okay.
So keep them coming. And hey, Anthony Taiti, this is my buddy. What's up? I see you, man. I'm on camera today. Now, when making my savings, would you advise that I spread them across several banks? This question is based on what happened with Chase Bank some time back.
Yeah.
So what would he say?
Okay, so
yeah, a lot of money sank, you know. Some people, I hope they have recovered.
Well, there might be a little left, but I think people have, the one that I know people have not been paid is Imperial Bank. Yeah. So banks, yes, they can collapse. Again, as I said, there are no guarantees. Across banks is important, especially if you have billions. Yeah. It's important that you don't put all your money in one bank. And even with the different investment opportunities, you don't put all your money in one place. Yeah. Even the biggest bank in the world can collapse if every single account holder decided that they were going to go and withdraw their money. You know, like what happened with Chase Bank. There was a run on the bank. Yeah. Every single, majority of the account holders just went one day and said, I want to withdraw my money. Yeah. So you have to realize that banks don't just keep money in the bank, right?
That's true.
When you deposit your money there, they don't just hold it in the account. They have to find, how will they pay you interest? They have to find ways to grow that money to make a return so that then when you come back for your money, they can pay you with interest if you have a savings account with them. So, you know, just to sort of explain the situation, it's not that just banks collapse every other day. It's just that if today, which bank is the biggest in your view? Yeah. You know?
There are many.
There are many.
I would say
like in Kenya?
Yeah, KCB.
KCB, for example. If every KCB account holder went today, I want my money, KCB will collapse. So the point is that there's no big bank that is too big to fail. Although there are banks that, you know, central banks will ensure they will never fail because of just how big they are. But yeah, so if you have a lot of money, yes, please don't put all your money in one bank. Okay,
that's good. Martin White, I hope your answer is well done. I mean, Anthony Tatum, my good friend. Carbon is asking, please share some ideas. Hey, when somebody says share ideas, it means that you have to speak a lot of things, but very shortly. On how to grow and balance one's investment portfolio. How do I look for some investment opportunities? I have already invested in real estate, money market funds, and stock market. Hey, Carbon, where have you not invested? But anyway,
I need to have a consultation with him.
Yeah, you need to go to another level, right? So that then I'm able
to answer specifically to his situation. So the question is, how do you?
Please share some ideas on how to grow and balance one's investment portfolio.
Yeah, so I think the way that I was explaining about thinking about what are your goals. Yeah. So I think a good place for him to start is, because he's got all these different investments, the question I would ask him is, why? So first of all, what do you have? Does he know where he's invested? How much the value is? What returns has he made? How is it performing? So what do you own? And then secondly, why do you own it? Why? Yeah. And does it serve the need that you have? So your portfolio needs to address the needs I have. So are your basic needs covered? Yeah. You know, if it's a mortgage, if it's rent you're paying, if it's all the different basic needs that you have for food, shelter, transportation, and all those different things within our basic needs, are they covered? do you have an emergency fund fully funded to 6 months?
Okay.
Is that already done? If that's done, okay, so what are the things that you are important to you? So for example, you want to I don't know, go on holiday once a year. There's some things that he wants to enjoy to do. Are those what investment opportunities have you put in or have you made to be able to address that need?
Okay.
And what are your dreams? What do you want to be able to achieve? What investment opportunities are you putting your money in that will potentially grow and help you actualize those dreams?
Okay.
Yeah.
He actually asked another follow-up quick question
go ahead.
here. And how can one invest in the US stock market from Kenya?
Actually, that's a great question. We will actually enable our clients in a very short time to do that from the comfort of their phone. So you want to buy Tesla, you want to buy Facebook, you want to buy whatever.
Yeah.
Actually, in fact, give us your details if you are interested in investing in the US markets.
Yeah.
Send an email to info@fib.co.ke with your name and phone number, and we'll get in touch with you as soon as we're in the onboarding process to finish doing this, and in a very, very short while we'll enable, very short, like in the next 2 or so weeks, guys will be able to invest in US markets without an issue. So yeah, give us your contact details so that as soon as we're able to, then we can help you do that.
Okay.
Yeah.
Kaboni, got it. Huh? So Mukami, the environmentalist, as you said earlier, I should be saving for my basic needs. Do you advise I keep my small money in the SACCO or bank? I think in a SACCO or the bank.
Where are you getting a higher rate? And then that SACCO, which SACCO is it? Is it a solid SACCO with a strong balance sheet that's managed well?
Yeah.
Please, SACCOs are great. However, SACCOs are mushrooming left, right, and center.
Yeah.
And so please don't invest with a SACCO that is new, that doesn't have track record, that so if it's a solid SACCO that's been around for many years, they're run well, then it's fine. You can invest with the SACCO, because I would assume the SACCO might have a better return than than the bank. So either or, as long as you're able to easily access the money when you need it, and the return is for your money is good.
So I think for you, Mukami, there's a lot of due diligence as well to check that they've been in existence for quite some time now.
Yeah.
And you're right, there are names we can't mention here of SACCOs that have really gone down with people's money, and they're still running up and down trying to chase them.
Yeah.
Very sad.
Yeah.
Mushko, sorry, I'm trying to pronounce your name. So Mushko Mumushka, great interview, first of all.
Then he
says, thanks for sharing the great insights. Please talk about, number one, life policies, and if this actually works. Oftentimes we hear of at point of maturity, one may not get what was promised. Is it worthwhile? Then I'll ask the following question. Let's talk about
so
it
life
first.
policies. So does that mean life insurance?
Yeah, I think so.
Yeah.
Yeah.
So
speaking of which, I got one because my cousin was working for the insurance, and just for the sake of it, I got into it.
If it's I could have a lot of money now if I would get money every time I heard somebody say the fact that they got an insurance policy because an agent has been pestering them for so long. They're just like, okay, fine.
Or a relative.
Where do I sign?
Take it.
Yeah. Oh my gosh. Please don't sign for a policy because an agent has been pestering you for 5 years. Please do not. Insurance policies have their role. So for example, if I go back to the example I gave earlier of being a single parent, if you're a single parent and you have children, young children, you want to be able to ensure that should you pass on or something happens to you and you're not able to continue to earn an income, then you have insurance that can sort them out.
Yeah.
So life insurance for somebody like that is critical. If you have dependents, life insurance is important. If you don't have dependents, as in you're single, even if you're 30 or 40, you have no business getting life insurance. Who are you getting life insurance for?
But
you understand my point?
I have a question in between there as you proceed on. This life thing,
what
in
life
between
thing?
they give you the life insurance, they give you some nice cash.
Okay, so that's an endowment plan. That's an endowment policy.
Okay.
An endowment policy is sort of a savings scheme that has insurance embedded in it. Okay. So what happens is if you're saving 5,000 bob a month, 4,000 gets invested in some opportunity, 1,000 shillings goes towards paying life insurance. So it's like a life insurance linked savings product. If you're looking to invest, please don't put money in life in insurance because insurance is not an investment. Insurance serves its purpose, yes, but it's not an investment. Right? So for him, I'd say Insurance policies serve their purpose. The question is, do you have dependents? Okay. If something happened to you, how much would you need to ensure that they have to be taken care of? Fine. That's the amount. Then get an insurance policy that covers that.
Okay.
If you don't have dependents, and by the way, that insurance, the purpose it serves is the risk that an unfortunate, unforeseen circumstance occurs. But it's not an investment. And if you're sometimes I remember meeting somebody who says, "Oh, I have 4 endowment policies, 4 insurance policies for my children." I'm like, 4? Why? Because what happens is, yes, you're saving, but the saving return you're earning, the return you're earning when you're saving is affected by the cost of the insurance. So that then you're doing really badly on your returns. By the way, as you invest, the one thing that you must do is at least earn more than what inflation is. So if you put money in this opportunity and you're earning 5% and inflation is 5%, you're doing nothing.
There's nothing, by the way. I'm just giving them money to do their things.
Exactly.
I think we need to have a conversation about insurance sometime,
You know what I'll do?
Yeah.
I'll have an insurance person come and then I will interview them so that, but someone who's not, maybe perhaps not from the insurance industry, but someone who understands insurance so that they can tell us, like specifically which the different opportunities that are there. Because, I mean, people make such huge mistakes.
Yeah, and there's a lot of offers, by the way, still.
So what happens is, by the way, one thing I must say, and I'm sorry, guys, I allow me to just say it this way, and I'm sorry because I know insurance policies, companies might kill me for this, but the reality is they have fantastic products. They do. But you know what happens? They hire agents to sell. What will an agent do, Maina? If you're an insurance agent and that's all you do.
I need to sell.
Exactly.
That's my focus.
And you're going to sell the highest return product that you have.
Yeah.
Because you need to make money.
That's true.
And if you're not making money, then what are you going to eat? So I don't care about you, really. I care about myself. So I'll come and tell you, by the way, this is the best thing for you to buy right now. Not because it suits you, but because it's going to give you a good return. Now, to make sure you buy, I'll give you the one that will entice you the most. So I will find a way of making sure that I sort out your need, maybe not as effectively as I should, but I'll get you a product that sorts us both out. But not necessarily because you really need it. And I find that with insurance agents, a lot of them, and it's not all of them, there are really good ones out there, but there are many who will come and push something and tell you need it and promise returns that really are not the truth.
Wow.
Yeah, because they need to sell. So you need to look at it against your situation and your circumstance, not because this guy is pestering, okay, fine, let me take the opportunity and just invest.
Really, a lot of thanks to guys asking questions because I have to go and rewatch this myself and take notes.
Okay.
Now, Mushko's second question was, would money markets be better than this?
Better than what?
Life insurance versus the money markets. But don't answer yet because there's also another one that is quite, I think that was Patty Madegi asking, please talk a bit more about money market as an investment. So there's a lot of questions about money market.
Money market is not next week.
Yes.
The second week of October. From then, where focus is money market. So can I leave that one for now?
Yeah, you can leave that one. Yeah. Make sure you just tune in.
Yes, yes. Please subscribe, guys. Subscribe, because I will actually cover money markets in detail. Yes.
Wow. Free. Now, anyway. Lilian Motuku. I'm just learning about the stock market and I would like to start investing. However, most people are discouraging me because of the political heat that is coming. And of course, there is COVID advice.
Please read that question again.
Yeah, that she's just learning about the stock market and would like to start investing. However, there's a lot of people discouraging her because of the political heat and the COVID situation.
Yeah.
What would you say? Knowing very well that the last time I checked is that the NSE recorded some profits in their quarter. Yeah. So
it's interesting that the best time to buy in the stock market is when things are on fire.
It's now.
Especially, well, I must qualify what I have just said.
Yes.
And I'll qualify it by saying this. There's companies that, because of COVID and the current economic situation we find ourselves in, and depending on how long this recession carries on, that will really do badly and may never recover. Fact. Wow. But there's other companies that even in this season,
they do well.
They're doing okay, and they will survive. And after this, will thrive, because this opportunity is also, when there's a crisis, there's also the opportunity that companies have to rethink their business, to do it more effectively, to sort of improve their systems, to leverage on technology, to find ways to deliver customer service even better to their customers. So while they may go through a crisis, but they will come out on the other side, maybe smelling a bit of smoke, you know, after the fire, but they will thrive afterwards.
Okay.
So I would say this is not the time to do nothing if you have some money somewhere. I think this is a time to start thinking through and looking and evaluating what investment opportunities should I consider. And what I would advise that person is, yes, everybody else is saying all this, but what are the experts saying? Have you talked to different analysts? All the brokers have a team of analysts that sit in their offices and they do nothing else minor the whole day. What are they doing? They're analyzing companies, talking to management, trying to figure out whether this is a good investment opportunity or not, given the current political environment, economic environment, and situation that we find ourselves in.
Okay.
So how about just picking up the call and talking to one of those research analysts to find out what are your views about KCB, about Equity Bank, about Kenya Power, about Safaricom. Why is Safaricom at 30? How did it happen? And we're in a crisis. What's going on? Should I sell mine now? You know, those are conversations you need to be having with somebody who knows what they're talking about. And it's a must for you to do that. You can't just say, yeah, the stock market is good, go open an account and start. No, do your research and talk to people who, and don't talk to one analyst. Talk to 2, 3 analysts and then make a decision.
Then you can make a decision based on the, wow, this is good. So Lillian, the best time to buy, by the way. That's what I took from her. Then there's a
and by the way, buy over time.
Okay.
Slowly over time. Don't just take all your money by today, because when you look at the environment, you see we are not yet out of this recession. We're still in a recession. And then next year is what? 2021. We're going to a politicking season. Elections. 2022, we're going to elections. So my suggestion would be buy slowly over time. So decide, every month I'm going to set aside X amount of money to buy stocks. And X amount of money I'll put in money market. And then I can also, if there's another Emakiba, I'll put my money there. And the amounts will be dependent on your needs, your goals, again, going back to that.
Wow. Ronnie is asking, great insight, Rina. What are the available options for investments at FIB?
Okay, great question.
Yes,
fantastic.
FIB is
Thank you.
Investment
Yes,
Bank.
FIDA Investment Bank. So the different investment options that we have at the moment are the stock markets, so shares. There's treasury bills that we can assist you to invest in. Treasury bonds. You can also, I just mentioned, we are currently in the process of finalizing the process of setting up for clients and investors in Kenya to buy stocks abroad. So if you want to buy Tesla, Facebook, and any other stocks overseas, you will be able to do that. If you want to buy an ETF, an exchange traded fund, you want to invest in the S&P 500 ETF, for example, we will be able to do that for you. Then we also, what we do is we advise customers, our corporate customers, on their business. So if you know, clients who want to raise capital, restructure their balance sheet, we also help them to do that. So what that does is we then create instruments or investments based on this company's need. So commercial paper. So the commercial paper is an investment where you put money in a company that needs working capital, and you put that money for a short period of time, so 6 months to a year, maximum a year, for that money to be able, for that company to have money to run its business within that short period of time, and then they pay you back the money. So because we offer corporate finance advisory services to these companies, we then generate opportunities for investors to invest in these companies. So these companies that are looking to raise capital every so often, and so we do our due diligence, we evaluate these companies and then create opportunities out of their needs, and then are able to offer these opportunities to our investors.
Let me read some 2 comments, and then there's we'll probably do a final question. We have 2 minutes. So there's a comment from Mukami, the environmentalist, again, and she's saying that I'm still a child in my finance journey, but Rina, you have really taught me a lot. Thank you.
Oh, you're welcome.
And then there's another comment as well from Martin Moy, who we have just answered, and it says that I feel we need more information on the stock market and gold investment, which is starting to happen from next week. I mean next month. Right?
Gold? No, that's money market.
Not gold, money market.
I will. Point noted. We'll organize. And by the way, I must say, Martin needs to join my class. I have an investment course starting.
Oh,
and
please talk about it.
I've been so busy, we've not yet finished. So yes, I have a course on investments that is going to take step by step, slowly. And the amazing thing about it is that it's going to be online. But not just online. We're going to have weekly Q&As. So we'll have opportunities for one-on-ones
Yeah.
with those who are, a one-on-one meeting, like a meeting with those who are doing the program to answer very specific questions so that guys are able to understand investment opportunities and make decisions based on their circumstances. And it's going to be affordable. So send me an email if you're interested. And Martin needs to join that class.
Yeah, Martin needs to.
It will really be beneficial for him. I've spent a lot. I mean, we've been working on this for a year.
Wow.
For a year. Working on the content, making sure everything is okay, adding on to it. Because, I mean, 45 minutes is not enough to answer.
That's true, yeah.
In depth what people should be
which
doing.
We've done.
Yeah, so it's going to be, about 6 weeks.
Okay.
And it's a fantastic program.
Okay, I'll be part of the pioneers.
Okay.
Now, let's answer this last question and then we can close it at that. John Anjichi says, good morning, Rina. Thanks for this. What about treasury bonds? Hey, guys are asking this. Will the yield be higher with political tensions and high currency foreign debt and increased internal government borrowing?
It is likely. It is likely. Yeah.
Okay, so
it is likely.
still an option.
No, definitely. I mean, government bonds are always an option, and they are an investment that is good. But I guess he's asking, will interest rates go up from where they are now?
Yeah.
Given those factors he's mentioned, and it is very likely that they will.
Okay.
Yes.
Shikomwangi, do we have good apps for stock trading?
Do we have good apps for stock trading?
Yeah.
Yes, we do.
Yeah. Okay.
We do. We have one.
At AIB?
If you go to your Play Store or at FIB, at FIDA, if you go to Play Store or what's the other one called? iOS?
Yeah. iOS for the app guys.
What is it called, you guys? App Store. App Store.
Is an Apple guy.
App Store.
Yes.
You search FIDA M Trader.
Yeah.
You will be able to download the app. You can open the account, but please do it during trading hours, between 9 and 3.
Okay.
And you should be able to actually open your account.
Martin just said that I'm joining for sure that class.
Yay! Well done, Martin.
Okay, Carbon says thank you so much, and he will. In fact, the big question here is, which could be the concluding remarks for you?
Okay.
Is how can guys get in touch with you? I would want you to say about the book, where guys put together the book, and how they can get in touch with you. Yeah. Because it's 9:01.
Is it?
Yes.
Wow, time flies. So how do you get in touch with me?
Yeah.
The best way is through email. sema@moneywise.co.ke. If you want to find out more about investing, the options that we have on offer, and you need a quick answer, write to this other email, info@fib.co.ke. That's info at F for Friday, I for India, B for Bombay.co.ke.
Okay.
And we'll be able to assist you. You want to know which shares to buy? You want to invest in a money market fund? You want to know which stocks can I invest in, or treasury bonds? When is the next market? All those things, info@fib.co.ke. If it's around the course that I mentioned, it's sema@moneywise.co.ke. About the book, it's Moneywise, Create, Grow, and Preserve Wealth.
Yeah.
This book, I wrote it over 3 years. And I still, in fact, I was telling Mina just this morning, I still refer to it.
Yeah, I was shocked that you referred to her own book.
Imagine, I still do. I mean, there's things I have learned over the years and through interacting with people that I've jotted down in this book that still serves value for me. And I think it's a great book. And maybe what we can do next time, maybe next month, in another month or so. Actually, there's a copy here. My director is saying, I should show you.
Let's pick it up.
Sorry, bad manners, but this is the book.
Yeah.
So you can find it on Kindle. You can find it on Amazon. And if you just send me an email or WhatsApp 0707 633 433, you will get your copy. It's actually a fantastic book. If I can say so myself, the forward is by a serious Kenyan. Can I tell you?
Who is that?
James Moria. James Moria is the group CEO of Centum Investments. And if James Moria has, it's a serious book. I mean, what I did, by the way, when I was writing it, for 1 minute, is fine, I've been in the industry for 17 odd years, and I was like, I don't know everything. So you know what I did? I sent my manuscript to 6 experts. Somebody from the World Bank, Moria himself, a private equity investor, one of my lecturers at Strathmore, his name is Professor Mudida, And I sent it to these guys and just said, look, imagine, read it, and also sent it to somebody from a certain publisher to just critique it. And these guys were so helpful, and it's a very scary process.
Yeah.
When you've done something, you think you've done the best that you can, and you send it out to people who are just brilliant, because you want them to give you insights on what you've missed out, what you could do better. And that was the best thing I did, because then I got back. I mean, I printed them out, in huge papers, and people just came back with comments and, why don't you think about this? Read this other book, da, 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 da. And it was such a valuable process. So if there's anybody who's writing a book, by the way, when you're done with your manuscript, please give it to key experts in the area that you're writing in. It's such a valuable thing. Wow. And they added such value to this book that I'm not even, I've been saying I'm writing another one. I'm like, I can't match this one. When am I going to do that? Yeah. But I eventually will, but that process was very helpful.
Okay.
Wow. Yeah, so it's a small book. Within 3 hours, you can finish it. Okay. In my view.
Yeah.
But
yeah. This is still brand new. I don't want to tear the cover, but I hope you were able to see that. I can just put it on the wide so that people can be able to see this. But anyway, Rina, thanks a lot for all that information. We already passed time. I know I was supposed to keep time. And guys, thanks so much for joining in.
Yeah, thank you for watching.
I think Momo, Mushko, we're going to respond to some of these questions, the emails that you're asking, the contacts you're asking for. We're going to ensure that you do that. I think for me, it's a wake-up call. I'm already reading in, and I was asking myself many questions as I was reading through this book. First, I read the first few pages, and I had to sit down and just digest and just think through about my purpose, why am I doing this, and all those kind of things. And I think it's insightful, as you have said. Guys, I was on the hot seat today asking Rina. No, you are on the hot seat, sorry. Yeah, but this is the seat normally that people sit in.
That's true, by the way.
Yes, yeah. And it's such an honor to really have you, Rina.
My pleasure.
And also an honor to ask you the questions. And I look forward to really getting to learn more and more from you and from your end.
Thank
you, For those
Rina.
who sent their questions, thank you so much for sending the questions. Thank you so much for keeping this conversation going. Remember, make this date every Friday. 7, no, it's actually 8 to 9 a.m. It's just that some of the people here come so early. And it's bye-bye for now.
Yeah, thank you.
All right, bye-bye.